Welcome to the tutorial on cost accounting. Today the chapter is Introduction to Cost Account. What is cost accounting? Cost accounting is a technique and a process of ascertaining cost, or it's a technique and process of determining cost. By this cost accounting, we can determine or we can ascertain the cost of any production or any performing service. Cost accounting is the part of accounting, and this accounting ascertain the cost of a particular process, batch, job, service or unit of any industrial activities, and this cost accounting is used for controlling all the factors which influence cost. So ultimately, cost accounting is a tool for controlling cost, and for the purpose of controlling cost, the first step is to ascertain or determining the cost of production or performing any service. The objectives of cost accounting. Generally, managers use cost accounting for making decisions, to formulate the strategy for doing research and development, for budgeting purpose, for production planning and pricing. If we clearly specify the objectives of cost accounting, we can say this cost accounting can be used for cost determination, for cost minimization, cost control, tender price fixation, fixation of selling price of a product, marketing of profitable goods, fixation of responsibility, judgment of efficiency, prevention of frauds, preparation of budget. So here we can see the difference between cost accounting and financial accounting. We already know that cost accounting is a part of accounting. The first difference is the cost accounting ascertain cost or determine cost. On the other hand, financial accounting shows the financial performance and financial position. Generally, for showing financial performance, we prepare profit and loss account or income statement, and for showing financial position, we prepare the balance sheet where we show assets, liabilities and owner's equity. In the second difference, we can see cost accounting can show a profit and loss for each product separately. On the other hand, financial accounting shows the total profit. That means it shows the profit and loss for all products. The third difference is the cost accounting controls the future cost. We already know that cost accounting is used for controlling the cost. Cost accounting process is used to control the future cost. On the other hand, financial accounting shows the past cost or past financial information. The fourth difference is this cost accounting can be compiled daily, weekly or monthly whenever required. On the other hand, financial accounting is prepared quarterly, semi-annually and annually. The fifth difference you can see, only manufacturing company and servicing company maintain cost accounting, but in case of financial accounting, all the organization prepare financial accounting. That means it's essential for all companies to prepare financial accounting. And the last one is, we can see, if you compare cost accounting and financial accounting, cost accounting has a smaller scope. On the other hand, financial accounting has a wider scope than cost accounting. Here there is a distinction between financial accounting, managerial accounting and cost accounting. We have already known that financial accounting focuses on reporting to external parties like investors, government agencies, banks, suppliers. Financial accounting shows the financial performance and financial position, and financial accounting follows the specific rules that is known as GAAP, that means Generally Accepted Accounting Principles, IFRS, International Financial Reporting Standard, IAS, International Accounting Standard. These are the some rules or principles which are followed to prepare financial accounting. That means financial accounting follows specific rules or principles. On the other hand, management accounting is used by the managers, especially the internal managers, to make decisions to fulfill the goals of an organization. Management accounting is used by the managers for planning, controlling and decision making. We don't need to follow any specific rules or principles for preparing the managerial accounting. And the last one, we can see the cost accounting. This is the technique or process of determining cost or ascertaining the cost. It is not essential to follow any specific principles or preparing cost accounting. Characteristics of an ideal cost accounting. Alternatively, it can be said that what are the prerequisites of a good costing system? Since there is no specific format for preparing cost accounting statements, in that case, we have to keep some points in our mind while designing the cost accounting system of a company. Points are costing system as per the size, layout or nature of the organization. That means whenever you are designing the cost accounting system, it should be based on the company size, company layout or structure and nature of the organization. Costing system should be easy to understand, easy to applicability. That means whenever you are implementing, it should be easy. That cost accounting system should have the arrangement for quick supply of cost information. Ideal costing system should have the advantage of comparison between the actual cost and the standard cost, and there should be arrangement for future decision making, and an ideal costing system should be reliable to everyone for the employees, for the executives, there should be a flexibility to change when needed, because sometimes you need to change your costing system whenever there is a change in your production or whenever there is a change in the process of performing the service. So these are the some characteristics of ideal cost accounting system. Here is another issue. We can see there is a difference among cost, expense and loss. Although sometimes we think that these are the same terms, but there is a difference. Here we can see the cost means the value of sacrifice made to achieve any goods or service or an asset for present or future benefit. Example of cost can be said that whenever we are sacrificing any value to acquire any asset. On the other hand, we can see expense. Expense is the expired portion of cost that brings benefit to the organization. Here we can see the cost, and the expired portion of cost is called the expense. As for example, we can say depreciation. This is the expired portion of asset. After using the asset, we can bring benefit. So expense is the expired portion of cost that brings benefit. And the last one is loss. This is also the expired portion of cost, but this expired portion of cost does not bring any benefit to the organization. As for example, if we say goods destroyed by fire, there is an also expired portion of cost, but no benefit has been achieved by this expired portion of cost. That's why this is loss. Thank you.